In this video, I'm going to show you how to save taxes using your principal residence in combination with a 1031 exchange. Now, you didn't think that was possible, did you? Well, here it is. Remember, a 1031 exchange is when you sell one investment property and buy another investment property using a very specific procedure. I'm going to show you how to use a 1031 exchange with your principal residence. The first way is, let's say you have a principal residence that you've lived in for 25 years. You paid $150,000. Well, now it's worth over $1 million. So, some accountants have you do several things that can help save your capital gains taxes. One would be to convert this to a rental for 2 years, and then you would have a combination rental and principal residence, and you would be able to use 2 different tax laws to save money on your taxes. Remember to show it on your tax return, though, as a rental, since it actually is that. When you then sell your property, you will do 2 different things. You will take advantage of 1031 and the advantages under what they call 121, which is your principal residence. The second way is if you had a rental property, but you decided to move into it. When you do that, you've converted a rental to a principal residence, but you must live in it as your principal residence for at least 2 years. And then you can take advantage of tax savings of up to $500,000 in gain if you're married. And if you're single, you could exempt up to $250,000. The third way is if you acquired your property in a 1031 exchange. If you did that, you then have to live in it for 5 years if you decide to make it your principal residence. And if you do that, you then can have the advantages of $500,000 exemption under the 121. Okay, and so you don't have to worry about recapturing your depreciation and your other taxes that you would have had to pay. Now, just as a reminder, these are capital gains exemptions under the IRS 121. We don't normally talk about 121 because it's your principal home, but in this case, we've done some combinations. So, your home, if you sell it, if you're single, you have a $250,000 exemption on your capital gains, or $500,000 if you're married and filed jointly. But remember, you must have owned and occupied it 2 out of the last 5 years, or 730 days out of the last 5 years. Wow, there's no limit on the number of times you can use this. In fact, sometimes people actually do serial home buying and selling. And they can save, if they're married and filing jointly, they can save up to $500,000 in capital gains taxes if that's how much their gain is. Let's review, since we're talking about the taxes you pay when you sell your rental investment property. If you sell it, you have a capital gains tax of 15 to 20% of the gain, depending on your income. But if you exchange it, this is deferred. Depreciation recapture, 25% on your investment property. If you exchange it, it's deferred, maybe forever. And your net investment income tax, if you sell it, you pay that, but if you exchange it, you defer it. So we will want to know this combination, since we're talking about your principal home capital gains exemptions plus converting it to a 1031 exchange. I'm the 1031 exchange lady, Maxine Golden, and if you've liked more tips on how to save on your taxes, hit the subscribe button.